Hey guys, it's November the 15th, middle of the month, but you can't think of it that way because we have Thanksgiving coming up very shortly. And then it's going to become a pure day traders market because we'll have been closing out the year. So it's a really interesting market that we're going into. I'm in sunny Florida right now. I can't believe how warm it gets down here. You think I would know growing up, but it still surprises me every time. All right, I'm going to share my screen. Past performance, it's not indicative of future returns, as we always like to say. Whoa. Wow, Yahoo Finance does not want to participate today, I guess. Here, we'll do it this way. All right, here's the indices up positively. And it's so interesting because I'm going to talk about PPI today. And then I'm going to talk about Walmart and Home Depot, and it's so interesting because the headlines on Yahoo Finance, it's hard. Like, I don't want to be tough on media, which has to produce articles every day, but I really think that it's bots writing all this financial news. I'm going to show you why. But we've got all the indices rallying today. We've got crude oil up finally, because it started the day in the red for whatever reason, which it's interesting. Dave and I always talk about it, but it's anyone's guess, I think, almost. But there are some folks that think it's because of what's going on in China's making things such that you might get some, a little bit of weakness in the dollar, which might help oil. But I don't know. I mean, I really think that Europe in general is, everybody's going to get a chance to take advantage of them going into this winter. And it kind of is what it is, because they really came into this low stacked into the turmoil that they then have been engaged in the last year. So it is really just a rough situation for them. If we look at the various the market, essentially, you can see big cap tech is rallying like mad. Walmart, I'm going to go through, great quarter, and so on and so forth. And it's really fascinating. I think in some cases, I would really have preferred to see another quarter, because I do think that it's unclear exactly what will transpire on the turns, especially for those that depend upon global ad revenue versus just US or Latin American ad revenue. So I've got some concerns there. And as much as people want to pretend like China coming on is going to somehow improve the energy situation, I think you ought to look at net energy production and the incredibly aggressive ambition that Xi Jinping has as relates to economic growth in China. And you'd realize that the only constraint that's really kept China from growing even faster is energy pricing. And they've done everything they can to improve that. In fact, and in addition, they burn a lot of coal for good reason. So it's not that the nation, and I don't know why people would believe otherwise. It's not that the nation, just because they are not a part of the Paris Accords, the Paris Agreement, it's not like they enjoy polluting. If you're confused about that at all, then it must be because you're young and you weren't in China in the 90s. I promise you, China has improved dramatically. Its air quality still has a long way to go, but it's not a desire of any nation after net income rises over $10,000 per capita to do anything but clean up its environment. So nat gas, as we know, is much better fossil fuel. Nat gas, as we know, is a much better fossil fuel than coal. Hence, there's no reason why China, being very, very much so an importer of nat gas, would be thrilled to continue to burn coal, except if they were concerned that there was some kind of global conflict. So I can't see the alleviation that everybody else believes there to be from China and the US making friends. So that's where I sit where that's concerned. Now let's actually get into PPI, which this is what I tell you, I almost don't want to come down too hard because I have to do this show every day and I make errors too. But my goodness, the headline this morning from Yahoo Finance was the stock market, stocks surge after inflation reading comes in cooler than expected. And they're saying the PPI declined by 8%. That could not possibly have been more the opposite of what actually happened. Final demand increased 0.2% in October. Now that was lighter than what the average median forecast was, which was 0.4, but they don't give you an annualized number, number one. Number two, that annualized number would have been 8% by any metric for the 12 months ending October. So, sorry about that, honey, whoever wrote this, but that was wrong. So here's the release. I would also mention that possibly there wasn't one part of it that came in weak except for intermediate demand. And that is Very interesting. That's actually the story right there. So prices for final demand advanced 2%, 8% on the year. Let me show you immediate demand, intermediate demand. That this is the full release chart, but it actually declined 0.2, and then it's actually coming in a lot 12 months. Now let's talk about why it's important that intermediate demand and the subsequent numbers associated with that are coming in lower. Here's the deal. And I'm going to show it to you through Walmart and Home Depot. Couldn't have been a more perfect setup for me to have this discussion. Intermediate demand and some of the other numbers that come in that release indicate that people are not making stuff. And if I've listened to now about 270 of these earnings calls, and every single one, despite the fact that they're seeing great demand, top line growth, and it's volume driven in a lot of cases, but not a soul is pretending like that all the economists, all these talking head brains is wrong. So they are provisioning their businesses in a way that global growth is somehow going to slow going forward, despite the fact none of them are seeing it. And let's be really clear, global growth slowing, US slowing, not the same thing. And some of these countries or companies have very little international exposure. So if we were to add in as well this PPI number, then here's what I see as a potential problemo going into 2023, but will absolutely make this market rip if it happens. And that's this. If people are not producing more in advance of a potential decrease in demand, and that decrease in demand does not happen, we are going to be right back where we started on this inflation thing. So just realize we're going to have to watch that very closely in the fourth quarter. Now, it's really anyone's guess whether or not that is a possibility at this point. I'm going to show you why. So it's just a possibility. It's not a definitive. I'm not coming out too aggressive on this yet. Home Depot, okay? Home Depot, we all know Home Depot. I mean, who doesn't love Home Depot? Even the ladies like it these days, you know what I'm saying? But, 5.6% sales increase. The earnings there came in at 5.1%. Operating income came in better. So they're getting pricing all the way through. They are seeing some oddities in what people are buying. So not as many barbecues, but plenty of patio and lawn furniture, like that sort of thing. So that makes them think, okay, well, I can't completely ignore the economists. And they had a big, long discussion about it. I want to show you the customer transactions and what they were seeing. Okay. So you're getting customer transactions. Woo, sorry about that. Customer transactions down 4.3%, but average ticket up 8.8%. So less people coming in and buying. And a lot of this really is the pros that we're concerned about, the pro builder versus the do-it-yourselfer. Both of them have slowed down. That was a discussion topic as well. But when they do come in, they're happy to pay whatever it is they need to pay to get their house fixed. Now, I think that's really relevant because we are also as well seeing just very normal behavior on credit quality. So all the consumer cards, I haven't listened to Capital One come out yet, but all the other ones, particularly the low end, which tends to be Synchrony Financial and Discover Card Financial, they came in and told you that they're not seeing losses in any kind of meaningful way, still below 2019. And certainly when the economy is wonderful, and certainly below what they would have expected to be the case with minus stimulus, jobs, et cetera. They're not seeing a slowdown. So that is something to take note of. Now, I didn't put the inventory number up here. They did increase inventory, but we're going into the fourth quarter anyways. And remember, you do have this concept FIFO, LIFO, so it's very hard to tell from that inventory number going into the Christmas holiday season, what's going on there. So whereas that could give us nothing this quarter. All right, let's look at Walmart. Walmart, same thing, 8.7% up revenue. Operating income looked like hell. But it looked like hell because you have to look at the adjusted number. They sold off this business, JD, and fair and square. If you take that out, it's not a business that's core in any kind of meaningful way, but taking it out, removing all the loss that's associated with that thing, and you do fair and square have a decent quarter from Walmart. Here is the mix, right? Made money on domestic, made money on international. Why do I find that fascinating? Because guess who didn't? Amazon. You almost wonder if Walmart's starting to take a little bit of share. We have talked about in the past, way back that people will return to buying things in stores versus buying things online. It does appear that some of that is happening here. Sam's Club, you can see how amazingly profitable that business is, up 18% on operating income, up 12% top line. And they were clear, it's all coming from food. Okay. The mix has changed. Food is the absolute strongest, but they are having difficulty getting inventory because, as I've mentioned, we got a food issue right now in this world. So we can all pretend, but it's coming clear as day in Walmart's numbers. And let's see what else we got. Yeah, that's really all I have. I'll keep it short for once. Let me hit the stop share.
Okay, mate. Yeah, Walmart to me is very impressive. I mean,
yeah, that was a really impressive.
They're even getting higher end consumers in there.
Yeah, people are
just go ahead.
No, totally. It's really strange because I was, I still have to look at all of what reports but it doesn't seem like luxury is slowing down either. So it's really, really strange how the consumer is managing through this weird environment that we have. But thus far, consumer has been strong. There's not one place. The only place I've seen anything is on some of the lesser autos, I want to say. Do you know what I mean? Some of the lesser autos have a little bit, like CarMax had a little bit of an uptick, and then there was on credit losses, but it's so buried any place that the consumer's actually showing weakness relative to any other period that, that we've ever looked at that might be weak.
Yeah,
America's been good.
Walmart just had a cloud business.
What's that?
Walmart just had a cloud business like Amazon.
I know, if only they had a cloud business. The weird thing too, that some people forget is that I was on a weird conversation, yet another weird conversation. And some people forget that if you really want to compare the volume of Amazon to Walmart, then you have to take transaction volume off of Amazon, which is not a number they typically report. They report only their revenue number, which does not tell you how much transactions pulled through. It's the difference between their businesses. So it's not that Amazon doesn't sell a bunch of stuff. It's that all the other services and things that they're putting on top of it, they haven't been able to keep up with their costs. Whereas Walmart has a little bit of a different way that they do it. I think they push their suppliers, they push anyone they can to try to make costs. That one I'm gonna have to think about how that plays out from business strategy perspective, but nonetheless, that's what's happening.
Okay, and that your PPI, what I think I hear you saying is they are hesitant to build inventories. Is that what you're saying?
Yeah.
Okay.
So I'm going to show you one other thing too that's really cool. And this one, I see it almost every company, but it's really crystal clear in Amazon and Home Depot, because Home Depot doesn't have charges that are making it very distortive for you to see the numbers. Now, this actually is a shout out to Miss Janet Yellen, who kept saying, if we do this, that, and the other, we'll just make corporate America pay for it, right? And she might be right. Because if we've had inflation this entire time, which the companies have absolutely pushed through, the economy hasn't fallen into recession, so volumes are still just fine. And then you've got a 4.7% provision for income tax increase. Now that's more or less in line with the profitability. It's a little bit higher than operating. So it's you've got an increase in tax income. She might actually be able to pay for all this crazy infrastructure stuff that we're about to start spending on through tax revenue and inflation. So just something I noted as well that's really unique, but very clear. In the Home Depot earnings, but it's actually clear. I mean, tax expenses increased for all of the companies that I'm saying have reported really fantastically this quarter, way more than I would have anticipated. I mean, it's the third quarter. The third quarter is the worst usually. The fourth quarter is where Christmas holiday buying, yada, yada,
Right. So you're saying they're not going to be able to cut prices with low inventory, and you got heavy consumer demand, right?
Yeah, but remember too that the PPI is really a manufacturing number, so you're still correct because all that stuff trickles on through, right? In various ways. But yeah,
So that's where,
especially with something like Home Depot, it trickles on through. Do you know what I mean?
That's where the scenario of inflation being very sticky, that
sustains for a bit. Yeah.
Okay.
I mean, now it's a really funky situation because now we're making peace with China. It appears, knock on wood, that continues. So I really do not want to be fighting with two nations in this earth, because then it gets really dicey. You know, pick a side, Russia, easy. Pick a side, China, for a lot of these countries is not going to be quite as easy. So we really don't need to be picking a fight. We need to slow it down a little bit and try to figure out resolutions on things like that. But
Cool. Okay.
all right, cool. Good luck. We still have a lot to go before we end into Thanksgiving. So see you guys tomorrow. Bye.